In this video, I'm going to show you how to avoid paying Spain's new 100% property tax for non-EU foreigners. Even though it's true that the new 100% property tax hasn't been approved yet, there's already an official law proposal on the table, and the Spanish government is really serious about this, and I'm convinced it will be approved soon. But in Spain, we have a saying, echa la ley, echa la trampa, which would be where there's a law, there's a legal loophole. And that's what we're seeing today. In today's video, we're breaking down two distinct scenarios based on the type of clients that we usually have. First, how individual buyers, this is people simply looking to purchase a home in Spain, can avoid paying this tax. And second, how investment funds, companies, or anyone willing to operate as a professional business can legally avoid this new tax. But before we get started, let me be crystal clear. This video is not about tax evasion or any kind of risky tricks. In fact, everything that I'm going to be saying comes from the official law proposal made by the Spanish government in May 2025. And all these loopholes to avoid paying the new 100% property tax have clear legal backing from the European Court of Justice as well. That said, this video shouldn't be taken as personal, legal, or tax advice. In fact, I recommend hiring a lawyer before buying a property or before making an investment in Spain. And by the way, my name is Juan Bertomeu and I work alongside my father, Juan Bertomeu, which is a lawyer and tax advisor in Spain with more than 30 years of experience. You'll see the contact details here, but let's go first. First, let's talk about regular families buying a house in Spain. These are people who don't want to set up companies or deal with complicated investments. They simply have the money to buy a nice house, usually for personal enjoyment. This actually represents the 80% of our claim basis. So if you're watching this video, it's very probable that you fit into this group. So if you're in a hurry or if you want a quick answer, the truth is that the new 100% property tax for non-EU nationals cannot be applied if the property purchase is subject to VAT. Alright, Daniel, but what does it mean? Basically that if you're buying a new brand home property from a real estate developer, the property tax cannot be applied. To fully understand why, you need to keep two important things in mind. First, when buying property in Spain, you'll either pay VAT for new property or transfer tax for second-hand property. And second, and this is crucial, VAT is harmonized at the European level. This means Spain cannot legally raise VAT rates or impose extra taxes on transactions already subject to VAT without going against EU law. Now, remember this, even if you buy a brand new home from a real estate developer, so you're not paying the 100% property tax, remember that the moment that you're going to sell it, maybe in 5 years, maybe in 10 years, the house will be already second-hand, so the tax would apply to that. But we're talking in this scenario first that this tax gets approved, which, okay, some people say that is not going to happen. I believe that it's going to happen, but remind that this law is clearly against Spanish constitution and the EU law. So I believe that yes, it's going to be approved, but eventually maybe it takes 1 year or 3 years. Maybe the Spanish courts or maybe the European courts are going to take this tax down because it cannot be approved. But yeah, I would have to go into politics, and this channel is not for that. This channel is about understanding how taxes in Spain and how everything related to real estate in Spain works. So if you are an individual looking to buy a property in Spain, this is the only way that you can avoid paying the new 100% property tax. But what happens if you are willing to set up a company? What happens if you are operating as a professional business? What happens? Well, let's see what happens. The first scenario is when two businesses or people operating as professionals buy and sell a second-hand property in Spain, they can waive the VAT exemption. That shifts the deal from transfer tax plus the potential 100% new property tax to just 21% VAT, which professional buyers can fully deduct. I think an example would be perfect to understand this. Imagine a US investment company sets up a Spanish subsidiary and purchases a 900,000 second-hand apartment block in Alicante, planning to run it as short-term accommodation. At closing, Spain, the buyer and seller waive the VAT exemption. So instead of paying the usual 8 to 10% transfer tax plus the potential 100% property tax, the deal carries 21% VAT. The purchase price would be 900,000 euros. The VAT paid at closing, which is 21%, is 189,000 euros. So the total cash outlay on day one would be 1,089,000 euros. Because the subsidiary will charge 21% VAT on every night rental, it can offset or credit the 189,000 euros of VAT it just paid against the VAT it collects from guests. Within a few reporting periods, often the first or second year, the company has fully recovered that 189,000 euros through its regular VAT returns. So the net result, the real cost of the building stays at 900,000 euros, and the dreaded 100% property tax never appears, and the only extra requirement was stating the waiver in the deed and running the rentals as a genuine business. I wish everything was so easy, but please watch the video until the end. Another method which is very interesting is using an investment vehicle called SOCIMIS. It might be different from what we just have covered, but it can be a game changer for certain investors, especially for those who want to invest large scale in Spain. A SOCIMI, or Sociedad Cotizada de Inversión en el Mercado Inmobiliario, is Spain's version of real estate investment trust. 3 quick notes. It must be a real operating company, listed or ready to list. At least 80% of its assets have to be rented out to third parties, and profits are distributed as dividends and enjoy a 0% corporate tax rate if the rules are met. The draft bill we have been analyzing explicitly excludes the SOCIMIS. Why? Because the European Union gave them already, so they are harmonized, and they gave SOCIMIS eco-friendly, no, but you know, a friendly environment for investing, so they cannot touch that. If you're a private buyer who wants to buy a property and maybe rent it out as tourist rental, a SOCIMI makes no sense because you're not going to meet the requirements. But if you're an investment group or several investors pulling capital and you're happy to keep at least 4/5 of your portfolio on the rental market, a SOCIMI can let you grow in Spain tax efficiently and without the 100% property tax on every property purchase you made. I know that most of the people that watch this kind of videos, so my videos of course, are intelligent people, but I think it would be good to give an example to understand this better. But before going into this, if you're liking this content, I would really appreciate if you subscribe to the channel, and you can also check our website or our office locations. I also want to tell you that if you want to book a consultation with me, you have a link in the description of the video, as well as the contact details up here and in the comments. So this said, let's go. Imagine 5 Canadian investors forming a SOCIMI. They inject 4 million euros, buy 4 apartment blocks, refurbish them, and rent every unit long term. Because rental income exceeds 80% of activity, the company retains its SOCIMI status. Every acquisition is either VAT rated, 10% for new builds, 21% if they waive the exemptions on resales, but never transfer tax. So the 100% surcharge is out of the picture. So the net rental income is passed through to shareholders with minimal Spanish tax leakage. Setting up a SOCIMI in Spain is not a straightforward process. This is why, if you're thinking about creating one or if you have any doubts about it, I recommend you contacting us or any other expert on this field. However, in the next months, I'll be creating a video specifically about this investment vehicle because it is really interesting, especially if the 100% property tax gets approved. And I also say it because thanks to the videos, I got to talk with lots of American investors, not only private buyers, but also, you know, for example, a group of 5 to 10 people who are really willing to invest lots of money in Spain real estate. So this is definitely an option to consider. This said, now we're going to talk about the risks that could be attached to the options that I just gave, because the proposal of this video is not to say, no, do this and this is a magical solution. No, it's backed up by the law, but it's not so easy. And I base my work, because I learned from my father, which, as I said, has been a lawyer and tax advisor in Spain for over 30 years, in transparency, honesty, and you know, sometimes you have to say things that the client doesn't want to hear, but I think it's the key of, being with yourself and doing a good job. Keep in mind that whether you set up a regular company or a SOCIMI, the property must be used for a legitimate commercial activity. In most cases, this activity will be renting, either short or long term. About the long-term rental, you have probably heard stories about tenant-related problems in Spain, which is called ocupas. And yes, it's a real issue. One bad tenant who stops paying rent could stall your investment for anywhere from 6 months to 2 years due to eviction processes. That's why we specialize not only in drafting solid rental contracts, but also in thoroughly vetting tenants, protecting you from situations like this or enabling quick, efficient actions if problems arise. But the truth is that most investors are more interested in short-term or tourist rentals because they are clearly more profitable. And the problem with this is that now in Spain, besides the tourist license, you need the new registration number. So the process of getting actually both of these documents, if you want to say, usually happens after you bought the property. So you must be really sure that you can apply and get the license before doing the investment. Because if you're investing in standalone properties such as villas or chalets, this process must be simpler. But even though the due diligence, so our work as lawyers and tax advisors, is very important, because there are some towns in Spain or some cities like Alicante or Javia which have frozen or stopped issuing new tourist licenses, even though if you meet all the requirements. So be careful with this, but especially watch out if you're buying in a community of property owners, unless you control the majority of units in a building, which, by the way, is something that investment funds are starting to do very soon. The Owners Association or Comunidad de Propietarios can explicitly forbid short-term rentals altogether. If that happens, your entire business plan could collapse. For example, if you've set up a company or SOCIMI to avoid the transfer tax and then fail to secure the necessary tourist license, you will suddenly find yourself exposed again to Spain's new 100% property tax. I have several videos talking about short-term rental regulations in Spain, so I'll just leave the playlist list down in the description of the video. My intention here is not to scare you, but I'm not the kind of person that likes to present things as if they were very easy or risk-free. If I'm making this video, the people that have to create this 100% property tax know these things as well. So some things will be easier to execute and some others not so much. As I said, if you need legal or tax advice for your next property purchase, or if you want to sell your property, or if you're thinking about relocating to Spain and you need a visa and you want to prepare your tax structure, if that's how you say it, so you can live here stress-free, we're here to help you. As I said, my father is a really experienced lawyer and I'm working really hard to be at his level as soon as possible. And I can guarantee you that these videos are made in the most professional way that I know. I dedicate a lot of hours to this video, so if you found it useful, as I said, I would really appreciate if you share this video on Facebook, on WhatsApp, on any platform. This really helps me and I'm really happy because things are going well. I have work, I get to live where I was raised, and come on, that's already success for me, and more things will be coming soon. So stay tuned for next videos. I'll see you soon. Bye bye.